Welcome to InvestingFlix, the ultimate destination for financial education and wealth building. Whether you're starting your personal finance journey or leveling up your investments, we've got you covered with expert insights, strategies, and tips to achieve financial freedom. Subscribe now and take control of your future. Don't forget to hit that subscribe button and turn on notifications. Let's walk through 6 steps to help you reach a goal of making $5,000 a month in dividends. First and foremost, it's crucial to have a long-term mindset. Dividend investing is a strategy that works best over time. With consistency and patience, it can be a powerful tool to grow your wealth. So why is this long-term approach so important? Well, if we look at the history of the stock market, it has consistently trended upward over the long term, even though there are occasional drops. That means if you stay invested and ride out the dips, your portfolio is more likely to grow in value. It's not about timing the market, but time in the market that makes the difference. Another key point is reinvesting your dividends. When you receive dividends, and instead of cashing them out, you reinvest them regularly, you're buying more shares, often at varying price points. This not only increases your share count, but also boosts your overall return in the long run. In addition, having a long-term outlook helps you stay grounded. It's easy to panic when markets fluctuate, but staying focused on the bigger picture keeps you from making emotional decisions that might hurt your financial progress. Avoid the temptation to sell out during temporary downturns, because those decisions can slow or even reverse your progress. Once you've got the mindset right, the next step is to adjust your budget. To truly benefit from dividend investing, you need to free up money to invest. That means being disciplined about your monthly spending. Allocate a set amount each month specifically for investments and treat it like a non-negotiable bill. This may require cutting back in other areas, but the payoff can be substantial over time. The more you can invest consistently, the faster you move toward your goal of earning passive income from dividends. It's a commitment to your future self and financial independence. Now that you've adjusted your budget and started putting money aside, the next step is to invest regularly. Making investing a habit is one of the most effective ways to build your dividend portfolio. Whether you're investing weekly, monthly, or on some other schedule, consistency is key. This habit builds momentum and ensures that you're always contributing to your financial future. Reinvesting your dividends is also an essential part of this process. Every time you receive a dividend, rather than taking it as cash, you can use it to buy more shares of dividend-paying stocks. This creates a compounding effect where your dividends earn more dividends over time. It might not seem like much at first, but as the years go by, the growth can become significant. Another advantage of investing regularly is the benefit of dollar-cost averaging. This simply means you're buying shares at various prices over time rather than trying to time the market. It helps smooth out the ups and downs of market fluctuations and gives you a more balanced average price. Over time, this can help boost your returns and reduce the risk of buying at a market high. After building the habit of regular investing, it's also important to keep trading to a minimum. Many new investors fall into the trap of constantly buying and selling stocks, thinking it's the way to maximize profits. But with dividend investing, the goal is different. You're aiming to build a steady stream of income, and that means holding on to quality dividend stocks for the long term. That doesn't mean you should never sell. Sometimes it makes sense to let go of a stock, especially if the company cuts its dividend or if its fundamentals have changed significantly. But in general, the less you trade, the better. Every trade you make can come with fees or tax implications, and frequent trading can also lead to emotional decisions that hurt your portfolio. Sticking with a stable set of high-quality dividend stocks and letting them grow over time is usually the best strategy. Less trading means more time in the market and more opportunity for your dividends to compound. As you continue your journey in dividend investing, a powerful technique to maximize your returns is reinvesting your dividends back into your portfolio. This strategy helps you build wealth more quickly by essentially giving yourself a raise with each reinvestment. The more shares you own, the more dividends you earn, and when you reinvest those dividends, the snowball effect takes over. Over time, this compounding can result in exponential growth of your portfolio. Think of every reinvested dividend as a little worker that joins your team. Each one contributes a little more to your monthly dividend income, and over the years they multiply. It's a slow process at first, but if you stick with it, the results can be truly impressive. Before we move on to the final step, it's worth remembering that consistency and patience are your biggest allies in dividend investing. Don't worry about trying to get rich quickly. Instead, focus on steady growth, and you'll be more likely to achieve your goal of $5,000 a month in dividends. Now, for the final step, monitor your progress and make adjustments when needed. As your portfolio grows, it's important to occasionally check in and make sure everything is balanced. One helpful rule is to make sure no single stock becomes too large a part of your overall portfolio. A good guideline is the 5% rule. If one stock grows to be more than 5% of your total portfolio, consider trimming it back and redistributing that money into other investments. This kind of diversification helps reduce risk. You don't want to rely too heavily on just one company for your dividend income. If that company has a bad quarter or cuts its dividend, it can hurt your progress. So keeping your investments spread out ensures that your income stream is more stable. Try to review your investments at least once a year. Look at how your dividend income is growing, evaluate the performance of your holdings, and make any necessary changes. It's not about micromanaging, but just staying informed and making smart adjustments as needed. With these 6 steps, you're well on your way to building a steady and sustainable stream of dividend income.